Yeah, whether my screen and audio is proper now?
Yes, sir.
Yes, sir.
Yes, sir.
Yes, sir.
Thank you. Yeah, construction contracts. Maybe you would have learned this in contract costing chapter, where in which you would have learned contract is a large job. Contract is a large job. Wherever the work is taking place for more than 1 year, we apply this particular contract costing method. Okay, so whenever the contract costing is applied, okay, then we should understand what are the different types of contract. One is called as a fixed price contract, where, for example, I and you agree to construct a building for rupees 20 lakhs. So that 20 lakhs is a fixed price. Whatever may be the cost, whatever may be the profit or loss, I must do the work for 20 lakhs. Okay, cost plus contracts are those where you and I sign for a price which will be cost plus some percentage. I will be keeping on spending on material, labor, and other expenses, and I will be getting a fixed percentage of profit on cost. Okay, so some contract may have a mixture of both. For example, I will sign a fixed contract with some, for example, if the price is going to be increasing, then you have to compensate me like that. I can have a clause. So what are the things that are included in the contract cost? All the costs which are related to construction. You and I mean, let us assume I run a construction company, or we run a construction company. What are all the things that can be included in the cost? Number one, site preparation work, approval cost, okay, planning cost. Okay, there may be old building, you are destroying it for construction of a new building, that cost. All material, labor, overheads attributable to construction. Any administrative charges directly attributable to construction. So all the work, all the expenses, okay, it can be even subcontract work also. For example, I will not do all the work in the construction process, where I will subcontract the work to somebody else. Somebody else will undertake the work on behalf of me. So in such cases, those things also will be included in the contract cost. Okay, so any expenses directly or indirectly attributable to construction will be included. Okay, so what cannot be included? What cannot be included? Simple. General administration cost, selling cost, research cost. Okay, if the plant or equipment is idle, then you cannot include the cost. Then cost incurred for getting the contract, which may be commission or brokerage paid. All these things cannot be included in the contract cost. So this accounting standard guides what cost can be included, what cost cannot be included. Okay, I hope you remember this. How to recognize the profit or loss in contract costing? How to recognize the profit or loss? On what basis you recognize the profit or loss?
Work certified, sir.
Okay, simple. If the work completion percentage is less than 25%, if less than 25%, how much you transfer? How much transfer to P&L account?
0. Full, sir.
Zero. Nothing will be transferred to P&L account. Everything will be kept in reserve. If it is 25% to 49%, how much will be transferred?
1/3.
Yeah, we'll put 1/3 of notional profit. Notional profit is calculated by preparing a contract account. Maybe you have learned in costing, into work certified or cash received divided by work certified. This much you transfer. The contract is completed 50% and above. What do you do?
2/3.
2 by 3
1/3.
into.
This becomes 2/3.
Yes.
So when the contract is nearing completion, only full profit will be transferred. If you look at what is the difference between a 49% completed contract and 50% completed contract? Only 1% difference. But if you look at 1/3 to 2/3, the profit recognition jumps. Look at a contract which is completed only 24%. You will not transfer anything to P&L account. But if the contract is 25% complete, you will transfer 1/4. You will transfer 1/3 of profit. Okay. So this old method of revenue recognition was criticized by the accounting standard authorities. So what happened is they developed a model. So this traditional method was criticized that you are working out only based on current cost. You are not provisioning for future cost. So now I request you to take it up. Accounting standard 7, that is income from contract, that is otherwise called as revenue recognition. Income from contracts, otherwise called as revenue recognition. How much you transfer? Before you go for revenue recognition, they are asking you to find out something. Find out the current cost. What do you mean by current cost? Amount spent so far. I request you to copy along with me. Amount spent so far in construction. To consider this. Then add estimated additional cost to complete the work. You do this also. If you add both, you will get estimated total cost. You will get estimated total cost. With this, you compare the contract price. With this, you compare the contract price. Then the difference will be called as estimated total profit. So you will get as a balancing for this estimated total profit. So accounting standard 7 says you do this exercise first. Work out the amount spent so far. Work out the estimated amount to be spent for completing the work. Then find out the estimated total cost. Then find out the estimated total profit by comparing the contract price with estimated total cost. Thereafter, how much of profit be transferred to profit and loss account? This accounting standard 7 recognizes 3 methods. I have not included this in the notes because certain things, you write and take it. Only then things will go to your mind. One is called as proportionate completion method. First one is called as proportionate completion method. Sir, how much you will transfer in this method to P&L account? This depends on estimated total profit into work certified divided by contract price. Okay. So how much you will transfer to P&L account depends on estimated total profit into cash, that is work certified by contract price. This is called as proportionate completion method. This is the first method. It is recognized. Second method, this is applied for cost plus contract. We call it as cost to cost method. Here the amount depends, or amount to be transferred to P&L account depends on same estimated total profit into current cost divided by estimated total cost. So this will be applied for all the cost plus contracts. Generally, the first method is followed by majority of the construction companies. This cost to cost method, is applied in some companies wherever they sign a cost plus contract. Third method, we call it as cash basis method or most prudent method. Why it is called as a most prudent method is if there is a problem in recovering the cash. For example, if there is a dispute between your client and of course the construction company, recovery of cash is doubtful. Otherwise, getting the contract money is doubtful. In that case, this particular method is followed. So amount to be transferred to P&L account depends on estimated total profit into cash received by contract price. Okay, sir, which method to apply, when to apply? Simple. Generally, if your construction company or construction work is normal, go for the first method. If you are signing a cost plus contract, go for the second method. If you are going for a problem in recovering cash, or if there is a problem in recovering the cash, go for the third method. So it all depends upon what kind of construction company that you run. Okay, so now I request you to copy this. Based on this, a question can be asked with 3 answers. Under proportionate completion method, cost to cost method, cash basis method, like that, a problem can be tested from this area. Okay, for about 5 marks, 6 marks in the exam. So it's one of the good accounting standard that can be tested according to me. Because this is testing your both financial accounting knowledge as well as your cost accounting knowledge. If there is a doubt, please ask me. You can unmute and ask also.
Sir,
Yes, please.
so the profit will appear in balance sheet, sir.
Balance sheet, yeah, profit will be added to P&L account. The profit
P&L
will
account.
be added to P&L account.
Okay. Okay. Sir, either cost appear in P&L account, sir. Estimated
No,
cost.
cost and all will be taken in contract cost. Maybe you would have learned contract
Contract
costing,
cost.
we prepare
Yes, sir.
the
Yes.
contract accounts. There it will be done.
Okay,
Sir,
thank you, sir.
Yes, please. Please ask.
please once again for the profit transfer to P&L, sir.
Profit transfer to P&L account depends on any other three methods. Okay, before adjusting or calculating the profit and all, first you have to work out current cost, add estimated further cost, so that you will get total cost of completion against which the contract price should be compared. Okay, so amount to be transferred to P&L account can be based on work certified to contract price, or current cost to estimated total cost, or cash received by contract price, like that. So this choice of the method is left practically to the construction companies, but in general, okay, the first method is followed by various construction companies. So we'll do a problem. Take it along with me. Contract price 50 lakhs. Cash received 30 lakhs. Within bracket being 75% of work certified. Okay. Amount spent in contract so far is 32 lakhs. This is 30 lakhs. Amount spent in contract so far is 32 lakhs. Estimated additional cost to complete the contract is 8 lakhs. Like this, they can give you a data. After this, they can ask you, compute the profit under different methods. Compute the profit under different methods. Like that, they can ask the question. So before we solve the problem, we have to work out all these things. What is amount spent so far? 32 lakhs. What is the amount to be spent additionally in future to complete the work? 8 lakhs. What is the estimated total cost? 40 lakhs. What is the contract price? 50 lakhs. The difference will be estimated total profit. What do you mean by estimated total profit? If you complete the work, if you complete the full work, this is the profit you will get. Okay. So under the first method, estimated total profit into work certified by contract price. So what is work certified? It's given in the problem, 30 lakhs is equal to 75% of work certified. So what is work certified?
40 lakhs.
Work certified, how to work out? Simple, 30 lakhs divided by 75%. You will get how much? 40 lakhs. So estimated total profit is 10 lakhs into work certified 40 lakhs divided by contract price 50 lakhs. What is the answer you are getting? $8 lakhs. 8 lakhs of profit will be transferred to P&L account. Second method, 10 lakhs into current cost 32 lakhs divided by estimated total cost. Estimated total cost 40 lakhs. This also, I hope, gives the same answer.
8 lakh.
Accidentally, the same answer. It need not be same. It can be some other answer also. Next one, it can be based on cash basis. 10 lakhs into what is cash received? 30 lakhs divided by 50 lakhs. You will get 6 lakhs of profit. Sir, which amount, how much I will transfer to P&L account? Which method I should follow? Okay. Practically, the first method is followed. For cost plus contracts, the cost to cost method is followed. If there is a problem in recovering cash or dispute, or there is a contingency that your client may not pay, then follow the third method. Okay. If it is asked in the examination, each of these answers can be tested for 2 marks each. Please copy this.
Sir, if contingency is given, if there will be contingency, then it will be given in the question that
Yeah, contingency.
there is contingency.
Yeah, that will be added with estimated cost, or that can be adjusted with revenue recognition. It will be given in the problem.
Okay, sir.
Have you taken up this? Shall we proceed with this? AS7 is over. In AS7, what are the questions that can be tested is? Number one, what type of cost to be included or excluded? That is a theory question. Then they can ask you different methods of revenue recognition. They can ask you different methods of revenue recognition. This one in AS7. Shall we move on to AS9 or wait?
Sir, could you please say how to treat if it is a loss, estimated loss?
If it is an estimated loss, it will be fully transferred to salary. It will be fully transferred to P&L account. It will be fully transferred to P&L account if it is an estimated loss.
Yes, sir.
Conservatism. Yeah, we'll move on to the next area. That is called as revenue recognition. That is called as revenue recognition.
Sir, please can you wait a minute?
Over. Shall we proceed?
Sir.
Shall we?
Yes, sir.
Yes, sir.
Yeah. Next comes revenue recognition. Revenue recognition means when I sell the goods or render services, or when I use like other person's resources, which can be money or which can be patent right, copyright, all those things. When to recognize revenue? When to recognize revenue? This particular part in the morning itself we had seen revenue from sale of goods can be recognized when substantial risks and rewards are transferred to the buyer. That's what. Seller has transferred the ownership to the buyer, or risks and rewards are transferred to the buyer. Seller is having no control over the goods, and there is no uncertainty of collection of money. So if the conditions are met, then revenue from sale of goods can be recognized. Okay. I transferred the ownership to you. For example, let's assume you are buying a bike. Okay. From the showroom, you took the delivery on 1/1/2020. You took the delivery on 1/1/2020. But RTO registration was done only on 10th February 2020. So when the sale can be recognized? You took the delivery of the vehicle, but if the vehicle is lost, seller is liable. Seller is liable till the RTO registration is done. Okay. So here, revenue can be recognized only when the ownership is transferred. Till 10th February, if the vehicle is lost or if the vehicle is stolen, then it's the risk of the dealer. Okay. So without registration, the vehicle should not be handed over also. Okay. So that is about seller has transferred the ownership, or risks and rewards of ownership has been transferred to the buyer. This example again, risks and rewards are transferred only on 10th February 2020. Seller will not have any control over the ownership of the goods after 10th February 2020. Okay. This one arises when there is a problem in recovering money. When there is a problem in recovering money. Okay. Next, in certain situations, when certain goods are subject to installation and inspection, that means goods can be accepted by the buyer only when it is installed. Otherwise, the sale is a package where the seller has promised that the goods will be installed at the customer's place. Then income can be recognized only when the installation is complete. Then, when the goods are sold on approval basis, what do you mean by sold on approval basis? Can anybody tell me?
When you send the goods and tell them to tell whether the goods are sold or not after a while.
Okay,
Sorry, sir.
very good.
You
I give
can
the
use the goods and then tell that whether you're satisfied or not with the goods.
exactly. For example, I'm giving you 10 days time to approve. Within the 10 days, you can either approve or reject. So in such case, the sale can be recognized only on your approval or after the 10th day. Okay. In case of guarantee sales, I sell a fan with 10 years guarantee. So will you wait for 10 years to recognize income? No. Recognize the income, but provide for repairs and replacements. Okay. In case of guarantee, it is only repairs. Recognize the income, provide for repairs. So on what basis? How much percentage I will provide for repairs? It all depends. It all depends on your past experience. Defective goods percentage in the past. So in case of guarantee sales, revenue should be recognized as per the substance of the agreement. Okay. In case of warranty sales also, you recognize the sales, but provision should be created for repairs and replacements. Okay. In case of consignment sales, we had seen in consignment account, we record the sales only when the agent is selling the goods to the third party. Income can be recognized only when the agent is selling the goods to the third party. Okay. In case of some special orders and shipments, for example, when you sell the goods abroad, okay, when you send the goods abroad or ship the goods abroad, the income can be recognized only when it is delivered and the customer approves such goods. Okay. In case of subscription, let's assume a newspaper reader has subscribed for the newspaper from 1/10/2020, and the subscription goes up to 30th September 2020. It's September 2020. Now, we are closing the books of accounts on 31st March. We are closing the books of accounts on 31st March 2020.
Sir, date wrong, sir.
Wait a minute. We are closing the books of accounts on 31st March 2021. So how many months income can be taken as current year income? You paid subscription for 1 year. Let's assume amount paid is like 6 lakhs. From 1/10/2020 to 39/2021. But our financial year ends on 31st March 2021. Will you take the full 6 lakhs as current year income?
No, sir.
Only
So
for
only till September, only till 31st March, October to 31st March can be taken as income. It will be like 6 months. So 3 lakhs will be taken as income. Remaining 3 lakhs will be taken for next year. Installment sales, when you sell the goods on installment basis, revenue or interest can be recognized on due basis. On due basis.
Sir,
Yeah.
once again for the subscription for a publication, sir.
This is what subscription for publication is nothing but you are paying for a newspaper or paying for a monthly magazine, things like that. For example, let us assume you are purchasing a newspaper called Indian Express. Okay, for 1 year, for all the employees who subscribed, paying 6 lakhs to Indian Express. Indian Express has collected 6 lakhs, but out of 6 lakhs, for a current year, they will take only 3 lakhs. Remaining 3 lakhs will be taken as next year income. Okay. Installment sales based on the amount due, income can be recognized. So here, a short answer question can be asked. Okay. When the goods are sold on approval basis, how the income is recognized? They will either give you option or type the thing, or you have to type the thing. When consignment sales can be recognized as income, or they can ask you when subscription can be taken as income, like that. Revenue from rendering services. Revenue from rendering services. See, there are 2 types of services. One is called as event-based service. Another one is called as time-based service. For example, you consult a doctor. Okay, doctor says, I will do surgery for you. Okay. For that, you have to do certain tests and other things and come back. We'll do the surgery. Okay. Let's assume testing, etc., took place during February 2020, but surgery took place on April 2020. Okay. So let us assume the total amount payable to the hospital is 10 lakhs. Okay. April 2020, the surgery is completed, 10 lakhs. Now, when the income will be recognized? When income will be recognized? Will you recognize it from February to April period for a period of 4 months? February, March, April, okay, over a period of 3 months, or you will take it as an income in April 2020. You understand my question?
Yeah, income in April 20 only.
Yes, sir.
Exactly. In case of event-based service, only when the event is complete, then you can recognize. This is called as completed contract or service method. Okay. For example, let us assume you are appointed as a cost accountant, practicing cost accountant, as statutory cost auditor. Okay. For the financial year 1920, okay, you are giving the report. You are doing your duty and giving the report in September 2020. Now, the audit fees can be recognized during 1920 or when you give the report. You're not doing concurrent audit, internal audit, you're not doing. You're a statutory auditor, verifying the cost records and giving the certification. When can you recognize income?
September 2020.
Exactly. When the event is complete, you can recognize the income. This we call it as completed contract method. Completed contract method. That is what is the first one. Completed service contract method. Revenue is recognized when the service is about to be completed and there is no uncertainties, etc. Okay. There can be time-based services. There can be time-based services. For example, you have signed annual maintenance contract for your AC, washing machine, fridge. Okay. Let's assume the amount payable is like 10,000 per month for all the appliances, which means you paid 1,20,000. Let's assume this amount was paid on 1st January 2020. Okay. For 1 year. This is for 1 year. You have contracted AMC and paid this 1,20,000 for 1 year. Let us assume the books of accounts are closed by the service provider on 31st March 2020. Now, how much income they will recognize? 1,20,000 into 3 by 12.
3 lakhs.
1,20,000 into 3 by 12. 30,000 they will recognize as income. Remaining 90,000 they will call it as income received in advance. So for all the time-based services, you can recognize the income on proportionate basis. On a proportionate basis. Okay. So if it is advertising or insurance agency commission, based on the proportionate completion. Based on the proportionate completion. Financial service commission also based on the proportionate completion service. Admission fees collected for sports, games, etc. and all can be recognized only after the happening of that event because it is an event-based work. Okay, so only after the happening of the event you can recognize that particular thing. Tuition fees is a time-based service. It can be recognized based on time, based on the period of instruction. Membership fees also will be recognized based on the time. Based on the time. Okay. Revenue from interest can be recognized based on accrual basis. If the income is due, you can record it. Revenue in the form of dividend can be recognized when there is a right to receive is established, which means when the company is declaring the dividend, the revenue can be recognized. So this is about revenue recognition. Okay. So revenue recognition, what type of questions can be asked? Okay. They can give a question like this and they can ask you, is it an event-based service or a time-based service? Or how the income can be recognized like that, they can ask you. Or they can give you different dates and they will ask you, like questions may be like this also. From AS9, you can expect 1 mark for the exam. Okay, from AS9, a separate question can be asked for maximum 1 mark in the exam. So for that, if you study this material, this is more than sufficient. Okay. Otherwise, for accounting standards, whatever has been discussed in the class, if you study that, it is more than sufficient. Weightage for the accounting standard is minimum 10 marks, maximum 15 marks. Minimum 10 marks you will get from AS. One can be match the following question. Another can be like value the inventory or calculate the amount of profit to be transferred in contract or calculate the value of fixed assets. Like that, they can ask you questions. Okay. Do you understand? Next.
Yes,
Let us
sir.
go for accounting standard 10, which talks about property, plant and equipment. Okay. Sir, what is this property, plant and equipment? Earlier, it was called as accounting for fixed assets. Earlier, it was called as accounting for fixed assets. Okay, what is the difference between AS10, old AS10 and this one? In old AS10, certain things were not covered, like that was not covered. Biological asset was not covered. Sir, what is a biological asset? If you have a cow, if you have a buffalo, if you have an elephant, okay, that is called as a biological asset. It can be a living animal or a plant. For example, if you have got a jackfruit tree or if you have got a mango tree, that is called as a biological asset. So old accounting standard was not covering agricultural activity. This new AS10 covers agricultural activity also. Simple. Agricultural activity includes two operations, basic operations like leveling the land, seeding, etc. and all. Basic operations. Then subsequent operations may be growing and cultivation, of course, harvesting, like that. So if both operations are covered, that is called as agricultural activity. Transformation and harvest. Transformation is part of cultivation. Harvest, of course, is the output. Agricultural produce is nothing but whatever you are getting from biological assets. It's all different, and all technical jargons. Okay, biological asset, nothing but the plant. Okay, it may be for example, paddy, or it may be wheat or whatever. Okay, so anything that comes from the biological asset, we call it as which one?
Sir,
Agricultural produce. Yeah.
how can you value a tree, sir? How will you value a tree?
Cost of planting, cost of growing, which includes irrigation, manure, labor, pesticides, which are given over a period of time. So this will be valued at cost.
Okay, sir. Okay, sir.
So what is a bearer plant? This is the most repeated examination question in theory. So they can ask this type. What do you mean by type? You are given a page to type. What is a bearer plant? Okay, simple. There is an agricultural produce. First, let me tell the technical meaning, then go for a non-technical one. For a period of more than 12 months. Okay. So you're not going to sell that plant. Leave it here. Let us come to that. You would have gone to tea estate. Okay. The tea estate, whether the plant is sold or leaves are sold. Sold.
Leaves are sold.
Leaves are sold. Leaves are sold. So in case of tea estate, the plant is not sold. Plant is not sold. That is called as a biological asset. That is called as a bearer plant. That is called as what? Bearer plant. Okay. Or you go to coffee estate also. Okay. Simple. A bearer plant is one which bears agricultural produce. Okay. Okay. So coffee estate, the coffee tree is not going to be cut and sold. Only the bean is going to be taken and sold. Okay. In case of rubber estates, are you going to sell the tree or latex? Tree is not going to be sold. Only the latex is being sold. Okay. So this is called as agricultural produce. And the tree is called as a bearer plant. Tree is called as a bearer plant. Simple. Bearer plant is the one which produce agricultural goods. Okay. Life will be more than 12 months. And there is a remote chance of selling this tree or this tea plants or coffee trees, all those things. Okay. So this is applicable for all the long-term crops like mango trees, jackfruit trees, all these things comes under which one? Bearer plant. What about paddy fields? Will it come under bearer plant?
No.
Why?
No, sir.
Why trees means plants are.
Yeah, plants are less than 12 months. Okay, it produces, otherwise the cultivation period is less than 12 months. After that, the plant die. Okay, so this is applicable for all the plants which are existing for more than 12 months and bear some agricultural produce. Okay, and you're not going to sell that bearer plant like tree, etc. and all, you're not going to sell. This includes even mango trees also. jackfruit trees also. Okay, so all those things are included. What about turmeric? It is less than 12 months or around 12 months. Okay, so that is not a bearer plant. Okay, so what are not bearer plants? Plants which are cultivated and harvested as agricultural produce. For example, whether tobacco cultivation is allowed in India? No or yes? It is allowed. Without allowing, how will you get cigarettes? Okay, maybe the Huns, etc. the people use. Okay, tobacco cultivation is allowed. So you are going to cultivate the tobacco. You are going to sell the tobacco leaves as it is. Okay, so from tobacco leaves, are you getting any other product? No, it is just sold. You are going to cut the plant and sell it. So that is not included in the bearer plant. Okay, then annual crop means whatever you are going to do every year. They are not part of bearer plants. So carrying amount is nothing but the, okay, simple. Earlier we used to call it as cost less depreciation. Cost minus depreciation. What is the name that is used for it earlier? Book value.
Book value.
Now this is called as carrying amount. Carrying amount is nothing but what is the value at which it is carried in the balance sheet. What is the value at which it is carried in the balance sheet? So nothing but cost minus depreciation is earlier called as book value. Now it is called as carrying amount. Okay. Cost. What are the things that should be included in cost? This we had seen in the first class. Capital expenditure. All the expenses incurred in construction, installation, test running, that is, whatever is spent till the asset is available or ready for use. Okay, so that is the cost of the asset. That is equal to the cost of the asset. So what is cost of the asset? This we have discussed in the capital revenue expenditure itself. Any amount spent in bringing the asset available or ready for use, we call it as what? Cost of the asset. Okay. Then depreciable amount also we had seen. Cost less scrap value. We call it as depreciable amount. Depreciation is a systematic allocation of cost that also we know. It is based on SLM or WDV method you can follow. Sir, what do you mean by fair value? Fair value means if I sell the asset today, for example, cost of the asset is 10 lakhs. I claim depreciation 5 lakhs so far. Book value of the asset will be 5 lakhs. Book value of the asset will be 5 lakhs. Fair value normally given as a notes to accounts. If I sell the asset today, how much I will get? What is a fair value? Depends upon who you are. If you are planning to sell your business, fair value means selling price. If you are going to use the asset in business, present value of cash flow. You have done in capital budgeting. Those who are doing group 2, or you will be learning present value of cash flow. That can be taken as a fair value. So it can be a fair market value. Clear? So fair value of the asset. Okay. Impairment loss you need not know at this level because it is required only for the final level. Impairment loss is one when there is a reduction in the value of asset because of some usage issues, that is called as impairment loss. Okay, so these are the things that you should know. Okay, this is the most important point in this fixed asset concept. Okay, what are the things that should be included in cost? Price, import duties, taxes, etc. and all. Anything that is attributable to bringing the asset in location and condition, like installation expenses, test running expenses, all those things. This also includes dismantling, removal, and other costs which are included. Okay, we can look at this. Any expenses which are incurred for the purpose of bringing the asset into current location or usable condition. Okay. So if you spend any money for opening the plant, that should not be included. Any money spent for introducing a new product, that should not be included in cost of any asset. If you are shifting the business into new location, that should not be included. Yeah, please mute. Training cost should not be included. Administration and general overhead should not be included. So in this, what kind of question that can be asked? Okay. The question that can be asked is find out the cost of fixed asset. Find out the cost of fixed asset. Shall we do a problem based on this? Finding out cost of fixed asset. This problem will give you
Yes, sir.
a wholesome idea for all your doubts. Okay. Shall we?
Yes, sir.
Yes,
Please take
sir.
it up. Okay. Take up this problem. A Limited imported machinery for $40,000 on 1st January 2020. Exchange rate is 60 per dollar. Import duty 40%. Transport is 40,000. Transit insurance is 30,000. A loan of is 5 lakhs or okay, 10 lakhs was borrowed on 1st January 2020 for the same at the rate of 12%. Installation expenses is 75,000. Test running expenses is 30,000 per month from February 2020 to April 2020. Government subsidy received for the above is 2 lakhs. Okay. So find out the cost of fixed asset. Find out the cost of fixed asset. And the question is, the asset is available, or you can say ready for use on 1st May 2020. So what are the things that can be included? What is the price of the asset? What is the price of the asset? $40,000 into 60 rupees. Import duty will be on this 40%. They have not mentioned anything about adjustment, etc. Transport charges should be included. Insurance during the transport also will be included because it is spent before the asset is put into use. Installation expenses. Installation expenses, that is also should be included. Test running expenses also will be included. Test running expenses will be 30,000 into February, March, April, 3 months should be included. Okay. Then interest on loan from 1st January 2020 to till the asset is ready for use. Till 30th April 2020, you have to include it. So what is interest on loan? 10 lakhs into 12% into how many months? January to April.
4 by 12.
4 by 12. So what is the amount? 10 lakhs, 12% for 4 months. 40,000. Less government subsidy. 2 lakhs. So if there is anything like during the test running period, if there is a sale of product during the test running period, there is any income during the test running period, that can be eliminated. This will give us cost of fixed asset. Anything that is spent till the asset is available for use, ready for use, is included in the cost of fixed asset. This can be tested for 2-3 marks.
Sir, can you give the example for impairment loss?
Impairment loss happens when there is a problem. Let us assume 34,35,000 is the cost of the fixed asset. We provided first year depreciation. First year depreciation, some 4,35,000 rupees we provided using SLM or WDV like that. So the carrying amount of the asset will be 34,35,000 minus 4,35,000. This is called as carrying amount. Okay. Impairment loss happens when there's a problem in cash flow. We work out present value of cash flow. Okay. On the end of first year, it comes to 24 lakhs. Okay. If I sell the asset also, it will go only for 22 lakhs. I will not sell the asset. If I sell the asset, 22 lakhs. If I use the asset, it will be 24 lakhs. So if you look at the present value of cash flow is 24 lakhs, but I'm showing the asset at 30 lakhs. I'm showing the asset at the end of the first year at 30 lakhs. So here impairment loss is 6 lakhs. Otherwise, impairment loss arises when there is a negative impact on cash flow of the asset in the future. Okay?
Okay, sir. Thank you.
Yeah.
Sir,
Yes, please.
sir, can you explain sale and approval?
Sale and approval is where I'm going to give you the goods, but it will become a sale only when you approve. For example, I've given the goods on 1st February 2020 with 20 days time to approve. Within 20 days, you can reject. If you approve, it will become sales. If you reject, it will not become sale. That's all. But if you remain silent for 20 days, on the expiry of 20th day, it will become sale. That is sale and approval. 20 days time is there for you. Within that, you can either approve or reject. Okay, if you approve, it becomes sales. If you reject, yeah, the sales will not happen. But if you remain silent on the 21st day, it will automatically become a sale. That is called a sale and approval. Goods are given to the customer with a period of time to approve.
Okay, thank you, sir.
For example, we tell that whoever is joining Bharadwaj Institute, you attend the class. Yeah, of course, you pay the fees, then attend the class for 20 days. Okay. Within 20 days, if you're not satisfied, you can take the refund. It's not an example. It's a practical thing. That's what we do in Bharadwaj. Okay. So on the 20 days, the student continuously attended the class. On 20th day, the student is coming and telling, "This sir is worst. I'm not able to understand any class." So you will get the refund because the sale is not happened. Okay, 20 days he continuously attended. 21st day, 22nd day, 1 month, the student has attended. Next month, maybe after 4 months, after the syllabus is complete, the student comes and tells, "No, I want the refund." Then you will not get it. Simple. That is called a sale on approval basis. So simple. Now the seller can recognize the income only on approval, only on the approval of goods or on the expiry of the 20th day. Done?
Yes, sir. Thank you, sir.
Sure. Now, if you could analyze, okay, now coming to partnership accounts, people were asking for some guidance in partnership accounts. Okay. I've given about 8 classes in partnership because partnership cannot be completed in revision. About 8 or 9 classes I've given in partnership. The 9 clauses: admission of partner, retirement of partner, okay, death of a partner, dissolution, okay, with insolvency is covered. Thereafter, piecemeal distribution, then amalgamation, okay, sale to a company. Okay. If you look at in online examination, the last 3 cannot be tested. Admission, retirement, death, dissolution with insolvency can be tested. If it is a question based on admission of a partner, okay, if it is MCQ, they will ask you calculation of new ratio and sacrificing ratio. That is a very famous question in the past also. Definitely you will get one question based on calculation of new ratio and sacrificing ratio. Then, if it is a descriptive type, okay, they will ask you, okay, question number probably 4A will be like, what is the new ratio? Okay, question number 4B will be like, what is the goodwill? Okay, question number 4C will be like, what is the revaluation profit? These things we used to work out as a step. Now this is going to be asked in MCQ or a kind of 1 mark question or 2 marks question like that. What is a capital balance at the end for each partner? And 4E maybe, what is the balance sheet total? Or they can ask you specific things about what is a cash balance in the balance sheet. Okay, so probably for new ratio they can give you 2 marks, goodwill 2 marks, revaluation profit 3 marks, this one 3 marks, balance sheet total 2 marks, and this one 2 marks. Like that, they can sum it up. This is how we can get the question. This is about admission of a partner. In case of retirement also, the same set of questions can be asked. Like what is the new ratio, goodwill, revaluation profit, capital, or the balance sheet total, or the cash balance. In case of death of a partner, one extra question that can be added is what is the amount due to the deceased partner. Apart from these questions, they can ask you what is the amount due to the deceased partner. In case of dissolution, they can ask you what is the realization loss. Okay, then what is a capital final settlement? Capital final settlement they can ask you. Okay, so these are the 2 things they can test. Okay, actually they will not go to this extent also. Okay, probably they will restrict to admission, retirement, and death of a partner in online examination, because only 2 or 3 questions can be tested, because you are not going to type the answer, you are going to give only the main answer kind of a thing. So concentration on admission, retirement, and death should be more, and dissolution or with insolvency you should have some knowledge, and according to me no knowledge is required in this particular area. So please learn that in this particular order. Okay, so if a student does number 1 revision class notes, okay, revision class notes, then I've given MCQ based on the full syllabus. What I've given, I say may will file a case against me. These are all compilation from past examination. MCQ based on the full syllabus I've given. If you are thorough in these two, I can guarantee you 60% plus in the exam.